Kevin O'Leary says that you should have a well-diversified portfolio.
No sector more than 20%, no stock more than 5%.
Mark Cuban says that's for idiots.
Diversification, that's for idiots, right?
Both Kevin O'Leary and Mark Cuban are incredibly successful business owners, entrepreneurs, and investors. But both have completely different styles when it comes to telling you how to manage your money and how to invest. So the question today is, who's right? On the one hand, you have Kevin O'Leary. He's the head of O'Leary ETFs. And he has a really important strategy when it comes to diversifying your risk and diversifying your investments. And this is something that the grand majority of people have heard before. In order to minimize your risk, minimize your chances of losses, you should be diversified across a bunch of different sectors. And this is something that I talk to clients about all the time. But the reality is, you need to have some level of diversification if you do want to minimize the amount of risk and your chances of losses and different things like that. A study published in the journal Financial Planning in 2011 found that a diversified portfolio of 12 asset classes had a much lower level of risk than an undiversified portfolio consisting of just one asset class. Time and time again, O'Leary talks in his videos about being completely wiped out when you're overexposed in one area versus another.
And when you make an investment, there's some probability you'll lose it. It'll go to zero.
Now, on the other hand, Mark Cuban talks about diversification being for idiots. Is he right? Well, let's break it down like this. For the average person and the average investor, having a well-diversified portfolio is a great way to grow and accumulate your wealth without needing a ton of expertise or knowledge in any particular field. If you buy a series of diversified mutual funds, diversified ETFs, different things like that, over the long term, it is likely that you're going to achieve anywhere from a 6 to 8% return. So setting aside something like 5, 10, 15, 20% of your income on a regular basis is likely to make you anywhere from $500,000 to $1 million when you go to retire. So this is a proven and surefire way to at least give you some level of wealth and some level of success when it comes to investing over the long term. And typically, especially when you talk about Kevin O'Leary, he has a vested interest in having you being invested in his O'Leary funds. Being invested in those O'Leary funds that are well diversified is how he can make some level of money on that. And the reality is, for most of us who don't have any specific expertise in the markets or any specific type of company, who haven't started our own publicly traded company, anything like that, that is probably the easiest and least stressful way in order to invest our money. But what's Mark Cuban talking about? What Mark Cuban is talking about and referring to is a level of concentration in your investing strategy in order to make better performance and make better returns overall. Now, this does, of course, come with added risk, but there is potential to amplify your returns by having your investments more concentrated in some type of way. So I had a friend who specifically was a geoengineer. I don't really even understand what that means, but basically he worked in the mining sector. And he invested some money, and he even asked me about it. If I invest some money in this specific mining company, they're looking for resources to do this, that, and that, the other. I don't know a damn thing about any of that. But he had a level of expertise in that area, thinking that if they found a mineral in a particular region, that his investment would double, triple, quadruple, whatever the case may be. So he made he went on that hunch, he made that investment, he tripled or quadrupled the money that he had put into that specific investment. Now, the chances of the grand majority of us being able to figure out that that was a good deal to make would probably be slim to none because we don't know anything about mining, but he had that specific expertise to do that. And one of the things that is worth thinking about is if you have a specific expertise in a specific area, you might be able to find good deals and good investments in that area that other people simply will not. So that gives you an opportunity and an advantage when it comes to being an investor. Now, if you look at the grand majority of billionaires and multimillionaires on the planet, people who have extravagant amounts of wealth, that the grand majority of them don't have a hugely diversified portfolio, at least not in the beginning. You look at someone like Bill Gates, he does have a diversified portfolio across many different sectors. You look at Warren Buffett, same kind of thing. But if you look at someone like Jeff Bezos, you look at someone like Elon Musk, you look at some of the wealthiest people on the planet like Mark Zuckerberg, their investments and their wealth are relatively concentrated in things like Facebook, things like Amazon, things like Tesla. And so if you want to have astronomical growth in your investments and see higher and above average returns, you're probably going to want to have a level of concentration. Maybe you're just looking for a way to amplify returns over the long term. Well, there are ways to concentrate your investments in order to achieve that. For example, picking out sector-specific mutual funds or ETFs can be a great way to concentrate some of your investments. So let's just say, for example, you have this belief that oil and gas is going to be the ultimate performing sector over the next 3 to 5 years. Well, instead of having money spread out across a bunch of different sectors, you could instead concentrate it in that oil and gas sector, and hopefully that will pay off. Now, of course, the risk is that if oil and gas does poorly, you could lose a lot or all of your investment. But at the end of the day, it could be the way to achieve longer and higher amounts of growth and wealth. So it really boils down to you, your style, and what you want to see as an outcome from your investing. If you're looking for steady growth, if you're looking for not too much swings, if you're looking to have enough for your retirement, for your kids' education, for anything like that, following the O'Leary way is probably the right way for you. Have a well-diversified portfolio, contribute to it constantly, and you don't really have to worry about it too much. On the other hand, if you are someone who is looking to make greater than average returns, if you are someone who is looking to achieve higher than average wealth, then having concentrated types of investments might be something that does wonders for you. But you have to understand that that does come with additional risk. Whether you're talking about my friend who made that investment into a mining company, or you find out an investment opportunity in an area that you are an expert in, you have to understand that in many cases, there are some good stories out there where people did make a lot of money, but those same people thought that another company was going to perform incredibly well, and it ends up going under and they lose everything. So while you can, of course, make above average returns by being concentrated in specific types of investments, the average person looking to achieve the average results probably will be better off diversifying. But if you have that expertise and you have that knowledge and you have the ability to understand how you're going to make money in a type of investment, from my view, there's nothing wrong with concentrating on that type of investment. Many realtors like to focus on real estate. Many engineers like to focus on engineering and technology companies when it comes to their investments. There's nothing wrong with either style, but you have to understand what the risks are of going with that style, what the rewards are of going with that style, and what you personally want to achieve before you make a decision. I don't think diversification is for idiots. I hope this helps. Jazakallah khair. Salam alaikum.